I will record it. Yes, I'll just upload it. I'll just upload it on YouTube and share the link. Right. So today what we want to look at is we want to look at how to create suppliers. Right. The creation of suppliers, just like the creation, is more or less the same, but only that you are creating a supplier. A supplier is a person or a company which is giving you the trading goods. If you are, okay, let's say you are trading in computers, it is the company or the people who will be providing you the computers that you're going to sell. Those are your suppliers, right? But still on suppliers, you've got what we call sundry suppliers. You know, these are your Sito Ferrari because you've got bills to pay. These are, if you are probably getting internet from Zimbabwe Online or Hotel One. So your sundry suppliers are like people who provide you support services to allow you to run the business. So you can create both the trading, those providing you with the goods that you're dealing in, and the sundry. You can create them both under this. The advantage is it gives you the age analysis report, which helps you to track what you owe in terms of suppliers. So again, you have got aging periods. We talked about aging periods when we were creating customer accounts. I'll just explain again for your benefit. And I said normally it's month-based. It's 30 days, right? In Zimbabwe, because of the economic state that we are in, you may not get 30 days. You may get probably 7 days, 21 days, 14 days, of which I said if you were to create those aging periods, you just have to add, then you have to define it. 7 days, description 7 days. Then if it is 14 days, 21 days, then it has to be daily. It has to be daily so that you can define it. You can say 7 days, or you can say custom. Custom when it is 14 days. So basically, that's how you add your aging, right? Then, but normally we just say for training, just work with month-based because most suppliers, like worldwide, you are looking at 30 days, right, from date of invoice. Right. Then under that, still we've got areas, just like what we saw when we were creating customer accounts. You still have got areas because if you are a big company, a small company, yes, you may not have like your suppliers, they may not be in terms of geographical, like you grouping them by geographical area, it may not be necessary. But if you're a big company, you are getting suppliers from various suppliers who are probably in different locations. And you may want to group them by those locations. So you create the areas. If you are international, you may create the areas as countries. If you are in Zimbabwe, you may create the areas by city. It all depends. Right? And as I said, if you have to create an area, you're just clicking add. It gives you this window. You put a code, which is up to you. You put a description, then you say, okay. All right. Then it's still under suppliers. The same goes with the delivered address codes. We spoke about this when we were creating customer accounts, and I said a supplier you may want to create these on your system, but normally it's the supplier who may want to create them, right, for his or her customers. You as a customer, you may not necessarily need to create these delivery address codes, but for your customers, you may want that because the customers would want to know where are you going to be delivering the goods. All right. Then the groups, just again, as I said, when we're creating customer accounts, you may group them. So you see, this system is giving you a variety of options. You can just create groups. I don't know how, either by product. See, okay, take a wholesale, take a supermarket, for example. You are getting suppliers. Some are giving you cordial, some are giving you laundry, some are giving you all different items, plasticware, and so on. So you may group them by product. So it's purely up to you. At times you may not group them. At times you may group them. So the area is a way of grouping. The products is a way of grouping, mostly, right? So you can use any grouping that you may want. And for you to just add a group is you click on add. We may just add a group. And I said the group code is purely up to you. It's purely up to you. So let me just probably create a group. Right. So Codius. right? It's not mandatory for you to create these groups, but at times if you've got many suppliers and you want to group them, it's very important. Maybe for an average company, you can just have trade suppliers, sundry suppliers, which means a supplier who's giving you your trading goods, you categorize that supplier as a trade supplier. The supplier who's giving you supporting services like your Sito for Harare, you then categorize that supplier as a sundry supplier. So you can use those for grouping as examples, right? Then people, I said there's no need for you to create people, because normally when we do our suppliers, we will see when we create the supplier account, you put the contact details and everything. So there is no need for that, right? Settlement terms, I spoke about settlement terms. If your supplier gives you settlement terms, you may just want to create them again yourself. But normally when you are creating them from the customer, you remember when we were doing the customers, we created 7 days. So whatever you create will affect, you can use it both for suppliers and creditors. You see, what the system is doing is the supplier is giving you an invoice and they're going to replicate the transaction which the supplier did for completeness of your books. You will see when we start transacting. For now, we're talking about creating or setting up the books. So the settlement terms that we may have as many settlement terms as possible for customers, for suppliers, right? So as I said, if you were to create a settlement term, you could just come there, then define it. Normally you have got, it's in days and it's meant to induce customers to pay in time. So if you are creating it from a supplier point of view, you are simply creating it so that when you do the supplier invoice, you can pick those terms. You will see when we start doing supplier documents or supplier transactions, right? Then shareholders, just like your people, we don't have to add this. We don't have necessarily to add this. There's no need for that. Right. Normally this for South Africa, because they've got what the term is, it BEE, Black Empowerment, Black Empowerment, something. So you see, they put shareholders and everything because they also want to see when they're implementing that BEE, that there's no conflict of interest and so on. But you find just for accounting, it's not like applicable. Then these suppliers, that's where we create our suppliers. I'm skipping that for now. I want to go to transactions. Transactions, they come when you create your Kanban file, we are given these transaction codes, so you don't have to worry about them. So these are like transaction codes which affect whatever transaction that we're going to be doing for a supplier. You will see these in action when you start doing transactions, under the transaction tab. So for now, we're just leaving it as it is because it's already created. Then volume discounts contracts, I skipped this and I said, okay, I'll skip it again. But you see, just to explain what is involved here, is when you are buying, you may have your suppliers and you are buying in bulk. Normally, retailers and wholesalers, they use this and they are giving volume discounts. In other words, they're saying if you buy for this threshold, then we're giving you volume discount. That's when you use it. I don't want to touch this for now because I feel it just complicates a lot of things. We may come back later to it once you have had a grasp of the system. So I'm skipping that. I'm skipping volume discount contracts, volume discount templates. Right. Then allocation utilities. You will see these ones when we start transacting. I spoke of open item. I'm going to see it again when we create the supply. Open item balance forward. I spoke about that. So this suppliers allocation, that's where it's applied. That's where it will work. For now, it won't make sense because we haven't done any transaction. But after doing transactions, you will understand what we are talking about. Right. Then you still under that, we've got balance relink. The relink, as I said, I think you saw it. We did it under the general ledger. It took time. Under customers, I didn't do it. But basically what it is simply doing is it's just running a data integrity check and making sure that your balances and everything, there are no errors, everything is balanced. So you just run it and you just need to do a backup before you run it. In case something goes wrong, you have got a backup to restore. Then the defaults, normally the defaults, you just say leave them as they are. They are configured. When you create your company file, they are configured. So leave the defaults. These are the defaults which affect all your suppliers. You can customize the supplier. Instead of trying to change the default, you can customize and change the supplier settings of a particular supplier. Then you leave the defaults as they are. Right. Right, let's go back and talk maintenance. All right, maintenance. Right. Okay, it's just updating the fields. Let's wait for it to do that. All right, then you are back again. Maintenance, suppliers. All right. So we are back again, maintenance, suppliers, then the discount matrix. Again, discount matrix, I said I'm leaving it, but again, it is volume discount contracts and discount matrix, more or less the same thing. It's more like you are giving discounts to your customers. And here you are just creating like a hierarchy of discounts, right? And you can even when you create your users, you can give them rights to say they can give this discount. So it's more like you're just creating that uh, these hierarchies. Then you can use them for discounts. So you've got a lot of things. You've got volume contract discounts. You've got this discount matrix. You've got the standard discount. Uh, the discount matrix and the volume, rarely using them because you'd find if you're giving discounts, you can just give straightforward discounts. Okay, I'm selling to you, I'm giving you an invoice discount of so much. I'm selling to you, I'm giving you a settlement discount of so much. Right. So then page transactions. Page transactions, as I said, it has to do with deleting historical transactions. This only happens when you have, let's say you've been processing for 2, 3, 4, 5 years. You now have got the historical information sitting on the database, and you just want to lessen the size or reduce the size of the database. You can page transactions. Of course, you need to do a backup. So you select the suppliers that you want to page. You select page transactions before a particular date, then you say, okay, system will automatically delete those transactions. Right. Then we have rename account. Rename account allows you to okay, you can give a new name to a supply account. Let's say you had said cash suppliers, and they say, okay, you realize that you don't want to call it cash suppliers, you want to call it any other name. So you will pick the supplier from here, then you just give that supplier a new name under rename account to, then you say, okay, the system will automatically rename that supply account. Right. Then transactions on hold. If you have placed a supplier on hold, those transactions will be listed. The transactions of that customer or that supplier will be listed at the head. Right. So we're going to go back because, as I said, what we want you to know, what we want you to grasp is the creation of the supplier account. Because what you do in business is the supplier gives you products, either you are paying cash or you are paying later on, whichever way. Right. Then for completeness, and because you probably are tracking inventory using search evolution, you have to capture those transactions, the supply invoice into your system, receive those products. You are going to see that when you start transacting. But for now, for you to be able to do that, you should have created the supply account. And for you to create a supply account, you are saying maintenance, suppliers / purchases, then you are saying suppliers. Then you are simply clicking on it. All right. So when you click on add, you'd find just like as you saw when we were creating customer accounts, you get this window. Then you can put a supplier code, which means before you come to Search Evolution, you should have prepared a worksheet of your suppliers, right? A code, full description, contact person, address, phone numbers, all the necessary details that are required, okay, that your supplier has. You should have put them on a spreadsheet. Then when you are coming to Search Evolution, you are simply creating, you view, you create. So, okay, let's say I've got my supplier, then I call this supplier National Foods. I'm just assuming that I'm a retailer, National Foods Limited. Right, this is a company. If it was an individual, I was going to pick the title, then I was going again to put the initials. Right. Now, as I said, the name can also be the description. Right. Then if you have groups, you then pick a group. Right. If you have got areas, you then pick an area. That is, if you are using this, it's not really necessary for you to be using this. It's not really mandatory. Unless if you are really big in terms of size. If you are a small organization, there is no need for this, right? But an account type, as I said, you have got two options, open item and balance brought forward. And I recommended that you should use open item. Why open item? As I said, it allows you to match your invoices against payments. So when you are processing supply transactions, you're going to have supply invoices, you're going to do supply payments. You should be able to match those payments against particular invoices so that your age analysis report comes out correct. Right. Do not select balance forward because, as I said, balance forward, what it does, it knocks off the balance. Okay, let's say a customer has got 500,000 a supplier, we've got 500,000 sitting on their account, right? We owe them 500,000. If you make a payment of 100,000, what balance forward will simply do is take the 100,000, knock it off against the 500, then just to show that there is 400 outstanding. You can't match it against a particular info. It's a disadvantage in business because you need an accurate age analysis, especially for reconciling creditors. When you do a creditors reconciliation, you are matching payments against invoices. With open item, it makes your life. Then if our account is foreign currency, we have to select the foreign currency, which means if your supplier is doing ZWG and also USD, you have to create two accounts. Aging, normally we say just take the monthly terms, 30 days. Then if you have got a credit limit, you're putting in the credit limit amount there. If interest is being charged on overdue accounts, you're putting that. If there are settlement discounts, you're putting that. So you've got settlement terms and settlement discounts, more or less the same. So you may just decide to put a discount there. If you are putting automatic discounts on invoices, you select that. If we had created a discount matrix, then we're going to select that. Then if this supplier is on hold, meaning to say you can't process transactions on this supplier, you tick on hold. When people try to process, they won't be able to process. Objection to processing and on hold, more or less the same. Tax. If the supplier is VAT registered, okay. If they are registered for tax, you put their TIN number, you put their VAT number. Then if they are charging you VAT, you select this input tax, right? You are selecting input tax. The contact details, simple, straightforward. These are the contact details of the point person for the supplier. Bank and other details, these are the bank details of the supplier. Right? Annuity billing, we're going to talk about annuity billing very soon, but it has to do with, let's say if you've got properties and you're renting them out, you're charging rentals per month. At times, it's a standard rate. Rentals do not go up month on month. Normally, you put a rental, $500, right? It can go for 6 months. So the annuity billing helps you automate that process, sort of. I'll explain it when you do annuity billing. This is just to give you a hint. people associated with the supplier, but as I said, there is no need for that. Incident history, if we are using contact manager, right, we are using the ordering process whereby internally a requisition is raised, approved. A purchase order is then raised, approved. So it's an automated process which is done on such evolution. So by so doing, we have to use what we term incident history, whereby incident tracking, sorry, obviously to have incident history, whereby you can initiate a requisition using Sage, go on and do the whole process and the approvals through Sage. We are not going to do that because it means we need a networked system and so forth. At inventory item, not really necessary. Suppliers will be just linked to. Then shareholders, as I said, not applicable again. So the tab that, or the tabs that we want is the supplier and the tax, right? These ones, right? Those are the most important. Then you say, so basically this is how you create your suppliers. You need to create all suppliers on your system so that they're able to transact. Simple and straightforward, because it's just a replica of what we do with customers. But on customers, are just doing it from a customer point of view. Suppliers dealing with the customer point of view. Right. Then I want to talk about annuity billing. Annuity billing, in simple terms, is whereby you configure the system to raise invoices at a particular time. So this module allows you to do that. And it's more applicable. It's more applicable to people who are renting out properties, to probably to schools. Schools, it can also do, because they are charging a certain, a particular tuition per particular period, which normally may not change over the course of a year. So you can manage that by setting up your annuity billing. Then it automates, like if you are raising invoices month on month, it will automate that process and,
The Lord is my shepherd.
and raise the invoices month on month.
I shall not.
Discipleship, biblical narrative.
Let me just stop. Let me just stop.
But to welcome,
Just stop this.
walk through scripture together.
All right. So, right. So that's the background of annuity billing. You are using it for managing or automating the invoicing of what we can term recurring income. People who own properties, more applicable. People like schools, more applicable. But you have to set up that. Now, for you to set up that is you come to annuity billing, then you say annuity billing configuration, then you just add. So because you're starting, you add. So you do it from two sides. You can do it mostly for your customers. If your suppliers also do that, you can also automate that process. But I want to look at it from a supplier point of view. So you can type in from a customer point of view. Let's do it for our customers. So you can type in, you can generate that, right? Or you can give it a name, right? I'll use rentals. Right. So this is the name that we've given. And they were saying, okay, we are charging rentals to our tenants. Now, what is the charge interval? Right. So charge on the first day of every week. So I'm telling the system, or we're telling the system that at the first day of every week, we are charging this. But is that correct? We would want to charge at the first day probably of every month. So we charge that. You can put a particular day. You can even vary it, right? So you're telling the system that you have to charge this, right? Then if you want to limit occurrences, you limit, meaning to say, probably you want to limit this to 12 months. Because your rentals may change. You want probably to limit to 6 months. It means the system will only run those invoices for 6 months. Right? They need to stop. activate on creation date, or you can select a particular date. Terminate, if you want to terminate, you can specify a particular date to terminate this whole thing. Right? Charge immediately on activation. Then if you are happy, because what you are simply saying is, I've got my properties, I want to be charging rental, and I want the system to be raising invoices at the first day of every month. And I want this to recur, like in my case, for 6 months. Right? Then once I say, once I create, let it be activated on the creation date. This is what I've selected. If you wanted particular dates, then you could select different. Then you say, so I now have this. Right. Then you have got a payables charge sheet template. Then you have got payables transaction. That is if you are doing for suppliers. But I want to do it for customers, because for customers it's more relevant to us. Right? So we have to create these templates and receivable charge templates. This is what I want to start with. So by simply clicking on it, right, then we can put a name of that charge template. All right. So I would just say rentals. It doesn't really matter. Okay. Then the transaction code. If we are going to be raising invoices, we say invoice. I aim for invoice. If we want to put an amount, because normally we're saying what the rental is sort of fixed, we already know how much is to be charged. Then are we charging tax? If we are, we select that. Do we have settlement terms for this? If we have, then we select that. Is this in foreign currency? If it is, we select the currency. If it is not, then we leave it that way. Right? Then once we are happy, simply say. So that one is created. We go on under annuity billing. We then also have receivable transactions. At the moment we've got nothing because we haven't transacted. So we then go back. I don't want to do suppliers, right? Then you have got this. If we want to add or remove, that is after we have done transactions. We can add or remove transactions, right? So you are going to see this annuity billing. Once we start doing customer transactions, you are going to see it, how it works. But the whole idea is to automate invoicing of your customers. Instead of you invoicing one student, you can set it up there. Then the system automatically will trigger the invoices on that particular day, and you can print them. Right. So let me move to credit control. Credit control, what it does is the system is saying you can manage, because when you are selling and they are giving debts, you are giving accounts. There is what is called I think you appreciate the credit control better because you are at a money lending company. Before you lend somebody, you do background checks, you do interviews and everything. That's your credit control. What you are simply doing is you are doing what we term credit control before approval of a loan. You have got certain processes that you run to assess and see the risk that is involved before approving an account. So here under credit control, mostly that's what you are looking at. So you've got documents. Okay, this could be the documents like your letters, like these are like written already by the system, and you can use them. This is what is happening. So you've got your application, create the application form. Instead of designing a new one, you can use what is in there. All right. You've got the number of documents there. So whatever document you require is there under credit control. What you simply need to do is to print it and fill up the necessary fields that needs to be filled. All right. Then it's still under credit control. You've got excuses. Right? These excuses have to do with customers. Right? They have to do with customers. What customers do is when the amount is due and you ask for money, they will give you all sorts of reasons. So you create these excuses, and so that when you are processing transactions, you can actually you make use of them. All right. Master's office. This is the master of High Court. The master of High Court. But normally, in terms of credit control, normally when you lend to a customer, the customer doesn't pay on time. You start by going to the small claims court, right? Depending on the value, I believe. If the value is too high, you can just go direct to the major court and report there, which will be done by the civil court, and until it gets to the master of High Court. So here is the offices, like putting in the address of the master of High Court. Then these ones are reminder types. So again, you create them if you want. It's very important for you to create them, because when you are doing follow-ups, you want a professional standardized way. So you can have them reminder 1 or warning 1, warning 2. The wording in those are different. Right? Warning 3. You appreciate this better because you are already in a setup which works with that. Then the defaults, do not change them. Just leave them as they are. So no need to change them. Terms and conditions. Then you set up. So you fill in your details there. Right. Then you select, do you give quotes? Then obviously it will be yes. Give the general duration of validity. Then put a validity there. Do you give goods on credit? You say yes. For how long can a client keep goods? Then you state, are the goods special packaging supplied with manuals, supplied with accessories? Do you guarantee your service? Do you do repairs? You guarantee your repairs. Then you say, okay. So you are simply filling up this. You're simply filling up this. Then you say, okay, right. Then right. So that finishes your credit control. If you're doing, if you are offering goods and services on credit. Then let's go to conduct management. Your conduct management is more like your CRM, your customer relations management system. So Evolution has got this conduct management, which is the CRM. Essence, what the system is simply saying is that you should always be in touch with your customers. So here you can create or load up your contracts, like the contracts. You've got contract agreements with your customers. So you use these contracts. Then the incidents, as I said, we cannot do it because what it requires now is set up where you've got offices here, offices there. Then you set it up and test if this is working. Right? It has to do with internal communication and communication with customers. So you create what you term incidents, which we use to do that. Knowledge base, if you want to read further, Salesforce automation. If you are linking with Salesforce, you use Salesforce automation. Then we are not going to be doing that. Right. Now let's go to inventory. Now the inventory, under maintenance inventory, this is applicable if you are dealing in physical products. Physical products. That's where you use infrastructure, right? Even when you are dealing with the service items, but mostly what is involved here is your physical items, physical products. I'm going to take you through all those buttons and explain what each button has and how it helps in processing or in setting up the system. So at the top there, you have got bin locations, right? The bin locations are coming from the old days when people were placing products in bins. right? If you actually place products in bins, right? Okay. If you walk into OK Zimbabwe, you've got shelves, right? And those shelves can be called bins, right? As I said, long back, people could actually have physical bins like your trash bin, but probably your plastic big bin where you are putting in products. And when somebody asks for where to find a particular product, they could be referred to bin number 4. Go to bin number 4, you should be able to pick that product. But I'm saying these days, you are no longer like using those bins, but we've got shelves, right? So your bin location can be a shelf. And I'll give you the example for OK Zimbabwe. You can number them 1, 2, 3, 4, 5, 6. So in the system, you also need to create them because you're going to create inventory items. So you want to link up an inventory item to a bin location. Then still under inventory, we've got delivery methods. So under delivery methods, again, nothing there, freight, road, rail. So we're simply adding the delivery methods. You're giving a code, then you're giving, you're actually giving the delivery method, then a comment for delivery,